Bitcoin is respecting resistance, but in my opinion, it won't last long. Meanwhile, something is starting to happen with the altcoins. Curious about what's next for the crypto market? Stay tuned. Hey, welcome to the 50th episode of the Crypto Market Analysis, where we've been meeting week after week for almost a year now to analyze Bitcoin, Ethereum, and an altcoin chosen by you. We meet up, and as you already know, we take a look at the charts from four, yes, not three, but four different perspectives: technical, on-chain, fire charts, and from the AI perspective, where we review altcoins available on the platform in terms of their growth potential, decline potential, or any other movement. This means that you simply won't find such condensed analytical knowledge as we serve here anywhere else on the internet. I really appreciate that. Thank you so much, because these Kanga Trends videos are getting a lot of new subscribers. But I also know that nearly 35% of people who watched the previous video still haven't subscribed to this channel, so now is the perfect time to hit that subscribe button. Give a thumbs up, ring the bell, leave a comment, whatever you feel like doing. And remember, what's presented in this video is absolutely not investment advice. This is solely my personal, subjective opinion about what I see happening in the cryptocurrency market. If you want investment advice, please consult a licensed advisor. But I encourage you to do your own research. If you're on board with that, you're ready. Grab your coffee and let's dive into the analysis. As always, we're starting our market overview with Bitcoin. There's no other way. What we see on the chart, well, it's exactly the scenario we totally expected. We have Bitcoin moving along this potential, for now, descending channel. And as we can see from the last video, it bounced off the upper band, the upper boundary of this channel. Great news, because we can see that technical analysis is working. We predicted that there could actually be a bigger sell-off here and that the price might pull back a bit. To what level is it pulling back? Well, here's the thing, we actually have four support levels, which you can't really see on this chart, but let me explain what I mean. First of all, Bitcoin is bouncing off the level of around $105,000 in this case. This is a test of that peak, but this time from above, not as resistance, but as support. So we have the first area that Bitcoin is reacting to. The second area that Bitcoin is responding to is the 50-day moving average, which I've just activated. And it was right here yesterday that we saw a false breakout, where Bitcoin closed its trading session about 0.3% below the 50-day moving average. Looking at the depth of the wick, it was just under 0.7%. And we can see a sharp rebound happening, with a strong green candle pushing upward again toward the upper boundary of our channel. Besides that, it's worth paying attention to the Fibonacci retracements that I mention relatively rarely. They are a very specific tool, and I tend to use them more to confirm certain areas, rather than to judge which direction the movement will go based on Fibonacci retracements. Let's check what actually happened here. We stretched the Fibonacci retracements from this peak here down to the low that was reached here. And we can see that the price bounced perfectly at the 0.5 level. 0.5. Which in this case is a very significant support. Besides that, it's also worth taking a look at the RSI, and the RSI tells us another very important thing, namely that the 50 level is once again acting as support. After that false breakout we observed a few weeks ago, we can see that there was another breakout to the upside and a test of the 50 level from above as support, so that Bitcoin could once again start its upward movement. It's worth noting that this channel I've drawn here on my chart isn't perfect. The fact that, for example, this lower line, this lower boundary, doesn't line up perfectly with the wick of this candle we're seeing here, which occurred on June 22nd, is justified. I mentioned this in previous videos, so those who watch them definitely know what I mean. However, from this channel, you can determine the potential breakout range if it actually happens. And there are really many indications that it will. Well, to determine this range, all you need to do is measure the height of this channel. That is, from our upper boundary to the lower boundary. We'll draw such a line and move it to the potential breakout point. Basically, I assume you'll be able to do this yourselves before the next video. At least that's what I'm assuming, that Bitcoin will break upwards, and you'll be able to move such a line from this area here, from this downward trend line, from the day the breakout happens, draw a vertical line upwards, and check how far it reaches. And in this case, we can see that it's $119,000. And notice, $119,000 is the same value mentioned for the second time when it comes to Bitcoin's breakout potential in the near future. 2 or 3 weeks ago, we talked about Fibonacci retracements, but based on the trend, which also indicated that the range between 119 and 121 is the area Bitcoin could reach after breaking out from its current zone. Now, the channel confirms exactly the same value, so we have a double confirmation. Basically, things like this happen relatively rarely, but here we have it. So right now, I'm really bullish about the market and about Bitcoin. However, if Bitcoin were to experience any turbulence, where should we look for support? Where should we look for opportunities to buy Bitcoin back? Well, I see an opportunity right here at the level where it has currently stopped, which is $105,000. But it's worth remembering that the candle we're observing today, well, this candle needs to close green first, because if by some miracle we experience a drop, then this level will be invalidated very quickly. And then I would look for support around $102,500. So those are the lows, those candle closes that we observed here. Here we also have a line drawn out. Maybe I'll highlight it for a moment. It's not particularly relevant to us right now because I don't think Bitcoin is going to head there anytime soon, but it's worth keeping in mind in case of any potential turbulence. And besides that, there's this level here at $100,000, which is a classic. And the last level is the lower boundary of our descending channel. These are the areas where, basically, if Bitcoin happens to drop, I'll be buying more Bitcoin. But what am I expecting? Well, I'm actually expecting a breakout to the upside, and there's really strong justification for that. There are quite a few bullish confirmations on the Bitcoin chart. All you have to do is switch the time frame from daily to, say, monthly. Just 2 days ago, we had the close of June. So it's worth taking a look at what's really happening from a very broad perspective. And here, a lot is happening, and it's all very positive. First of all, this candle, the June candle, is the highest green candle in history that we've seen on the Bitcoin chart. It's the highest monthly close ever. Moreover, the structure of the entire chart remains very bullish. We can see very clearly that this bottom, which occurred here 3 months ago, is a test of both this peak and that peak. In other words, the 80H areas from the previous cycle. So from that angle, it's extremely bullish as well. But aside from that, apart from the monthly perspective, it's also worth taking a look at the weekly perspective. And here things are also getting very interesting because this candle closing the past week not only covers the range of the 2 previous candles, but even more, since the third one here is also included. We can see that this is the second highest weekly close in Bitcoin's history after this one here, so that's also bullish. Additionally, the RSI is traveling above the 50 level, so that's also very positive. What's more, the MACD, which is in fact a lagging indicator, had some bearish momentum here on the histogram, and now, basically last week, it switched that bearish momentum to bullish. We can see that those light green colors have changed to a dark green color. And here we have a kind of reversal of the local trend, which is why Bitcoin's upward movement, whether on the daily, monthly, or even going back to the weekly time frame, is fully justified. In today's material, I mentioned Fibonacci retracements. If you're interested in this topic and you're a beginner trader who doesn't really know what they are or how to use them, be sure to check out Kanga University. The link about Fibonacci retracements is pinned in the description of this video. I encourage you to deepen your knowledge this way. From a technical perspective, an attack on a new 80H for Bitcoin is definitely justified. But what does it look like in the case of fire charts? Well, looking at the chart here, you might have some slight doubts. First of all, let's note that the blue line here represents the price of Bitcoin, while the horizontal lines are the sell and buy volumes. Sell volumes are the ones above the blue line. The brighter they are, the more there are. On the other hand, buy volumes are those below our blue line. And here as well, the brighter they are, the more there are. It's worth noting that currently, Bitcoin is hovering around $109,000. And here, at these price levels, there are about a dozen or so sell volumes. Millions of dollars in Bitcoin, I emphasize, waiting to be dumped onto the market as soon as Bitcoin touches or reaches this price. It's also worth noting that these volumes have been increasing over the past few hours. What we're seeing here is basically an action that's happening today, exactly today, so these are very fresh developments, very fresh volumes. There are also some slightly older ones, for example, around the $109,000 mark. Well, here we actually don't have that much volume because it's just $13 million in Bitcoin waiting once again to be dumped onto the market. So in my opinion, these volumes, the ones closest to Bitcoin, are very easy to break through and sufficiently strong buying power can easily absorb them. And this buying power is really coming in because we can see through the lens of CVD that our brown line, meaning the whale wallets, are very active and are indeed buying at this moment. Interestingly, the other wallets, like the retail ones, which is our orange line, as well as the other colors we have here, for example the purple line, these are our second largest wallets, those that hold between $100,000 and $1 million in their balance. Well, they're not buying at the moment, so right now the market is being driven by the whales. Ethereum is also behaving according to the outline scenario. We can see very clearly that after breaking downward, Ethereum is returning to certain price levels, which in this case may act as resistance for it. First of all, looking horizontally, we can see here that Ethereum is currently moving in the lower zone of this consolidation, where it has remained for the past few weeks. What's more, it is stopping at the 50-day moving average, which is clearly acting as resistance because we can literally see just a few rebounds here. Additionally, we are also dealing with the RSI, which is struggling with the 50 level and currently can't break through it. It's also worth noting that in this case, somewhere around here, we also had the 200-day moving average. And that's exactly what appears here, giving us a double resistance. So right now, Ethereum is struggling with double resistance at the moving averages, but these moving averages are also sending a very interesting signal. First of all, what we have here is what's called a golden cross, when the 50-day moving average crosses above the 200-day moving average. Historically, such signals are considered quite positive for the cryptocurrency market in the long term, especially for Bitcoin, and very often for Ethereum as well. Let's check how this looked in the past, when such golden crosses occurred. We'll go back in time a bit. Maybe I'll minimize the RSI here too, since we won't need it anymore. And we can see, for example, the situation here from December 2024, where a very similar scenario took place. We had the 50-day moving average crossing up through the 200-day moving average from below. And indeed, there was a certain price bump here, with the price rising to around $4,000. But watch out. That was basically the end of the rally, so we really can't talk about any excessive optimism here. But let's go back further and see how it looked even earlier. Here, we're dealing with November 2023. A similar cross. And we can see that this actually kicked off a very strong upward trajectory for Ethereum. So from that perspective, it's bullish. However, it's worth looking at least one more example. Let's go back a little further. And here we have the year 2023. This is February, and we also have a bullish cross here. Now, there were increases. They did happen. There was some turbulence along the way, but there were also gains that were quite promising. Basically, from the moment the cross occurred, that was from this day, and it was also the day when there were significant drops to the local peak. We can see that Ethereum went on a 65-day journey, which resulted in a 30% increase. Now, that's not particularly much for such a period of time, but it's still quite a positive signal, which could suggest that Ethereum has a chance to break through this gray box that it's been struggling with for a very long time. So, I'm still keeping an eye on Ethereum all the time. I saw some potential here for it to break through these moving averages, but as long as they're not being broken, and as long as this gray box isn't being broken either. Basically, I'm keeping my distance from Ethereum, and if this zone gets broken, because it's a very strong resistance zone that's really widening, then I'll be much more interested in Ethereum. For now, I'm just watching. And as usual, let's check out Ether on Fire charts. We can see resistance levels appearing around $2,500, 2,520. And as we know, that's exactly where our moving averages are, the 50-day and the 200-day, because, as we know, they're currently moving together. Who's buying Ethereum on the CVD? When we take a look, we can clearly see that once again the whales are making their presence felt. That's our brown line. Retail investors are doing pretty well, although right now they're on a downward trajectory, just like the green wallets, which are those holding between $1,000 and $10,000 when it comes to buying Ethereum. In the last 2 or 3 days, let's say 2 or 3 days ago, they were very active and were buying Ethereum, but right now they're pulling out of the market. Maybe they're looking at moving averages, checking out horizontal resistance levels, and aren't making any investment decisions at the moment. They're just waiting. The altcoin of the day is Solana, and if you like day trading, honestly, Solana is a perfect example for trading within intervals, whether short or long, between key resistance and support levels. Because we can see that Solana bounced very nicely off the $126 level. This was an area we had marked out for a very, very long time, as I've mentioned before. And now we see that Solana is breaking out towards the next resistance, which is around $157. This resistance was briefly broken. We can see that long wick to the upside. This resistance is actually twofold because the 50-day moving average is also here, so Solana is bouncing off this level. Importantly, Solana might slowly be breaking out of this range trading between one band and the other. Why is that? Because we can also see a certain downward trend line, which Solana is currently breaking out of and is now testing from above. Here we also have double support because it's not just this downward trend line, but also this local peak right here. So double support means double the chances that there will actually be a rebound from this level. And so far, during the day, we can see a green candle forming. Let's also take a look at the RSI. Will the RSI tell us anything? On the RSI, oh, that's interesting. Actually very interesting, I would say, because it points to triple support. That's because Solana managed to break above the 50 level on this indicator and is currently testing the RSI at 50 from above. So that's another piece of the puzzle suggesting that Solana could break upwards and try to surpass the $157 level. If it manages to do that, then the $200 mark should serve as a natural resistance. So the area around $166 is definitely justified as a potential selling point, at least in the short term. And we can see sell orders on fire charts just below $166, because exactly at the $160 level as well, we see that traders are watching what's happening on the technical charts and are definitely reacting to our 200-day moving average. Besides that, you can also spot some sell orders at the $150 level for Solana. Let's take another look at the chart and see what happened here. 150. Well, that's basically the peaks of these closed candles we're currently observing here. So these are justified levels, although I expect they'll be taken out very quickly and Solana will have room to move a bit higher. Who's buying? Well, the whales. The whales are back in the game once again. We can see that the brown line is moving up very high. Moreover, there are a bit more buyers here now because the purple wallets have joined the game. Retail investors are also doing quite well. And the green wallets, which we mentioned in the case of Ethereum, are also currently in a slight upward trend, at least throughout the ongoing day. We can see that their interest is not waning at all. And if you'd like me to analyze your altcoin, remember, it's a very simple thing. All you need to do is register on Kanga, and you'll find the registration link in the description of this video. Browse through the cryptocurrencies we have and choose the one that interests you the most. Let me know in the comments with the ticker or the name of the crypto you'd like to see in the next video. The one that gets the most popularity will be featured here. So you know what to do. Go for it. AI has reviewed the cryptocurrencies available on the platform and selected those with the most interesting setups. In this case, ones with a pro-growth outlook. These are the ones currently breaking out. As we can see, a breakout is simply a move out of a formation, which tells us that this cryptocurrency is on an upward trajectory and most likely a strong one at that. And we can see that the first of these, with basically the greatest growth potential, is optimism, which could increase by 162 and almost 0.5% in the next 64 days. This is a setup that was detected 2 days ago, and it's based on the fact that we have a falling wedge here. Is this a falling wedge? Personally, I'd argue with that because I don't really see a very regular wedge here. What I see more is a downward trend line, which optimism is currently breaking out of, and indeed, this could lead to a breakout and send this cryptocurrency soaring to very high values. 162% is really quite a lot. Besides that, we also have Solana. Solana, which we mentioned in today's material through our analysis. Here, we can see that a triangle is forming. And I didn't see this triangle either, but I definitely saw a descending trend line, a downward trend line, which has been broken. And in this case, it gives Solana the potential for gains of around 33% within 51 days. So that's pretty good too. Although it's a bit long. A bit quicker because basically in 12 days Axie Infinity could go up, since Axie is currently breaking out of this descending channel and has the right to soar by almost 30%. 29.15% in just 12 days, so that's really not bad. Besides that, there are a few other cryptocurrencies that are also breaking out. If you take a look at what I have on the screen right now, you'll notice that among them are Litecoin, Blur, and Gala. So the altcoin market is currently coming to life, and it really looks quite promising. And there's a chance that this time altcoins will follow Bitcoin as well. On the ETFs, there's a red sell-off bar, but note, only one. So in my opinion, there's nothing to worry about. We can see that basically yesterday, on Tuesday, July 1st, we experienced a bigger sell-off, which in fact might balance out one of those buying days we had here. But considering that we had those buying days practically every single day for 2 weeks straight, it's absolutely not something we should be afraid of. So from this perspective, ETFs are still in play, still positive. Buying outweighs selling, so the market will most likely soar a bit higher soon. So let's move on to on-chain analysis and check whether our perhaps overly bullish sentiment isn't hiding the fact that the bull market might be ending soon. Let's check this, because indicators are the best tool for that. And here in front of us, we see the MVRV Superposition indicator after halving, which I've mentioned many times before and will mention many more times in the future. As we know, based on this chart, during the ongoing bull market, Bitcoin is most likely heading towards reaching the value of 3 on this chart, that dashed line which I'm highlighting here right now. And in this bull market, Bitcoin is represented by this red line, which I'm marking here at the moment. And as we can see right now, this red line is at the level of 2.19, and as we can see, it still has a long way to go to reach 3. Even though Bitcoin is quite close to its current all-time high, the indicator is still quite pulled back, which means there is still plenty of room for growth. How does it look in the case of NUPL? That is, net unrealized profit and loss, which is also a very cool indicator that, every time it reaches around 0.75 in its history, signals that we are dealing either with a local top or even the end of a bull market. Just a few years ago, we could see these blue areas on the chart here, which very clearly, through their color, indicated that this was the peak. Now, we no longer observe such distinct areas. The last time we saw them was back in 2017, but still, these numerical regions around 0.75 are being reached, and we can draw conclusions based on these numbers. And let's look at what's happening right now. Currently, the NUPL is around the 0.55 level, so there's still a really long way to go before we reach 0.75. This means that the growth potential remains high once again. But what does the Bitcoin balance on exchanges look like? Because if Bitcoin is going to rise, it's best if it keeps decreasing on exchanges. And look, that's exactly what's happening, because we can see that here in the last week, we've marked that there was a bit of an uptick, but overall Bitcoin keeps decreasing. And these are almost the lowest levels in several years, basically since, as we can see, December 2020. It's not a new low just yet, because that new low was formed here, as you can see, on June 16th. We haven't broken below that low yet, although the trajectory is downward, and that's most likely what's going to happen. So it's time for a contest. First, the rules. Present your own analysis of one of the cryptocurrencies that I discussed in today's video. So it can be Bitcoin, Ethereum, or Solana. Present a technical, on-chain, fire chart, sentiment, or fundamentals perspective. Whatever you want, and remember, you don't have to agree with me. The author of the most interesting comment will win 20 KNG from me. And the winner for the previous episode is MB94, who, as I know, is not winning for the first time. Since it's not your first time, you know what to do. Get in touch to claim your prize. If you enjoyed it, and I truly believe you did, and you still haven't subscribed to this channel, make sure to hit that subscribe button. You can also leave a like, a comment, whatever you want, and please rate this episode on a scale from 1 to 560, where 1 means it's weak, bland, and you don't want to see anything more. 560 means it's fantastic and you want more of it, and if you do want more, as you know, we'll meet again next week. Bye!